Welcome to the Infront ASA Q4 2019 results. With us today, we have CEO Christian Nesbæk and CFO Max Hofer. Over to you guys in Oslo.
Hello everyone and welcome to this Q4 presentation. So with the Q4 numbers we can get a complete overview of the whole year 2019. And I will have to say that it has been an extremely successful year that really has transformed the company in so many ways. Not only has our revenue increased many times, but also we have increased a lot on the EBITDA side, on the product sides and many other areas. So let's look at the details. So let's look at our strategic goals and how to get there. And this maintains unchanged. It has been this strategy that has brought us in this position we are now. So we continue to grow in the Nordic, and with our latest acquisition we can consider all of Europe as our home market. Having great products on one platform is our highest priority, and in long term we will continue to do transaction. And significant growth both on top line and EBITDA level. We have managed to quadrupling the top line in 1 year, and this is more than anyone could have hoped for. Our annual recurring revenue is now at 108 million euros. Our product portfolio has expanded into new interesting areas, and our geographical coverage is now covering most of Western Europe. Since we merged two fairly similar companies like Infront and VWD, there is a lot of upside on the cost side since we are doing a lot of things twice. And there will be an upside on the income side, both from cross-selling to existing customer, but also as a bigger player to new customers. Our first priority is to combine the two companies, so we have one offerings for our clients, and the first step into introduce the brand Infront to all VWD clients like we did in Q4. At the same time, we start the work on combining the products in the former two companies into one platform. The lowest hanging fruit here is combining the data collection. So this has had the highest priority, and this is what we have focused on in Q4. Significant progress made with regarding to achieving our long-term cost capturing ambitions. Well on track to reduce stock exchange fees and other data costs by euro 2 million on an annual basis. Furthermore, achieving our target for various short-term savings by euro 0.1 million. We are also seeing initial results regarding long-term initiatives, where roughly euro 0.4 million have been secured so far in 2020. We maintain our long-term goal to achieve 8.5 to 11 million euros in annual savings. Not only has there been a significant revenue growth, but we have also doubled the number of professional users. For all of these users, we have new products to offer. We have also split the revenue up in 3 different segments, as you can see here. So that was all from me. Now over to Max Hofer.
Thank you, Christian. It is my pleasure to present to you the Q4 2019 financial highlights. Our revenues almost quadrupled year on year, coming in at 28.5 million euros in the fourth quarter. The majority of the revenue growth, as you know, is due to the 2 acquisitions that we closed last year. 95% of our revenues were coming from subscriptions, with our annual recurring revenue now standing at more than 108 million. As we mentioned earlier, this is an extremely important figure for us to follow, as it is the best indicator and also the best predictor for the long-term health of our operations. Adjusted EBITDA increased to 4.8 million euros compared to 1.3 a year ago. As expected, EBITDA margins are still somewhat lower compared to previous periods at 16.9%. This is mainly due to the two acquisitions, which originally had significantly lower margins than Infront. In Q4 2019, the group's revenue increased to 28.5 million euros compared to 7.3 million for the same period last year. For the first time, VWD has been included for a full quarter. We also saw a positive impact from one-off revenues of 1.4 million in the period. We do not expect similar levels of one-off revenues in the coming quarters. Gross margin continued to improve in the wake of recent acquisitions. We believe that gross margins will continue to improve going forward as our cost savings initiatives will bear fruit and we are able to spread fixed data costs over a larger number of users. The adjusted OPEX increased to 4.5 million from 1.2 million in the wake of the recent acquisitions. Adjusted EBITDA increased by more than 260% year-on-year to 4.8 million, and the EBITDA margin stood at 16.9%. When we look more closely at the revenue development per region, we can see the effect of having included VWD for a full quarter for the first time. The DACH region is now by far the largest and most important region for us. The Nordics have seen a stable underlying revenue development year-on-year. However, at the same time, we also see continued negative FX impact when we translate Norwegian crown and Swedish crown income into euros. Other regions increased to 6.4 million euros compared to 0.7 million, mainly due to the inclusion of VWD and Market Connect, but we also see continued positive development in the UK and South Africa, albeit at still small levels. Looking at a revenue split per segment, the new segment VWD Group is by far the largest, with 18.7 million in quarterly revenues. Terminal and Solutions increased by 42% to 8.3 million year-on-year, and this is mainly due to Infront Italy. We saw a quarter-on-quarter drop in this segment caused by reduced pass-through data invoicing in the region of around 0.8 million euros. However, the margin impact from that is very limited. The News and Other segment was stable at 1.5 million euros. As can easily be seen on this chart, the cash flow for 2019 was mostly impacted by the company's acquisition in Germany. In order to finance the transaction, the company raised 105 million euro bond and 242 million in new equity, NOK that was. The company also entered into a 10 million revolving facility for working capital and general business purposes. The cash flow from operations was 9.8 million for the year, even though it was negatively impacted by transaction-related costs of 5 million euros. Finally, cash flow from investments was negative 122.7 million, which was mostly related to the acquisition payments of VWD and other investments in R&D and PP&E of 5 million euros. The closing cash balance, as can be seen, was 18.7 million euros, reflecting an increase of 10 million euros year-on-year. In summary, Infront is on track with its ambition to create a leading European provider of financial information to finance professionals. As Christian already said, our focus is on continued integration of the recently acquired businesses in order to really capture all the cost-saving potentials that we have identified. As we have shown today, the integration efforts of these operations is going well, and already significant annual cost savings of around 2.5 million euros have been secured by today. We see continued revenue growth in all regions, and we also have a future potential from up and cross-selling opportunities that will support the long-term organic growth ambition. Finally, we also continue to see attractive M&A opportunities in the markets, which we intend to pursue selectively. Thanks again for following and for your continued interest in Infront. We will be back with our Q1 financials on May 15th.